Hello. Oil prices are up and gas and electricity contracts have softened. So let's take a look in some more detail. Oil was choppy within day on Monday as forecasts suggesting an increase in global demand pressured prices higher. However, despite this, the front month contract closed the session marginally lower day on day. Brent rose on Tuesday, supported by higher demand forecasts and an indication from OPEC Plus that there may be further production cuts after their next meeting on the 4th of June. Prices rose again on Wednesday. The weekly EIA report showed a 12.5 million barrel draw on stocks, which was greater than expected. This was coupled with a warning from Saudi Arabia's oil minister that short sellers betting oil prices will fall should watch out for pain, which market participants took to mean further production cuts to come. Brent lost $1.75 per barrel on Thursday after the Russian oil minister suggested he did not think additional OPEC Plus cuts were likely. Last night, front-month Brent closed at $76.61 per barrel, which is up $0.61 compared to last Friday. Prices were mixed at their close on Wednesday, with conflicting pressures at play. Near-term contracts eased as demand was well below the seasonal norm and the system was oversupplied. Summer 24 closed up 0.2 pence per therm, whilst all other longer-dated contracts lost value. All contracts then rose on Tuesday, largely due to a revision in wind generation forecasts to 20% below the seasonal norm, the impact of which is greater demand for gas. Most contracts gained around 1.5 pence per therm. Contracts started to soften on Wednesday, ignoring bullish oil. This was due to reduced demand with the warmer weather, additional LNG cargoes arriving in the UK, and falling carbon. Losses were then seen across the board on Thursday after support levels for TTF were broken. Winter 23 and summer 24 both lost 8% day on day. Last night, all contracts closed lower than last Friday, losing between 7 and 14%. Oil prices fell on Monday, taking direction from bearish oil and carbon. Contracts ignored their bullish gas counterparts on Tuesday and followed carbon downwards once again. Lower carbon continued to pressure the market lower on Wednesday. Near-term contracts shed almost £4 per megawatt hour day on day. Thursday was another bearish day for power and all contracts eased. Last night, all contracts closed lower compared to last Friday. Near-term contracts lost around 12%, whilst longer-dated contracts lost around 10%. You can download the full version of this report from our website. Thanks for watching, and we'll see you next week.